E-commerce has transformed business worldwide, making it easy to reach global customers and scale your online store. However, selling online isn't just about generating sales. It also comes with tax responsibilities that many sellers overlook. From sales tax to VAT, GST, and import duties, taxation can impact your business profitability and compliance. In this video, we will break down the essentials of e-commerce taxation, covering how different countries tax online businesses, the risks of non-compliance, and best practices to manage your tax obligations efficiently. An e-commerce seller is anyone who sells goods or services online. But did you know there are multiple ways to run an e-commerce business? One of the most common methods is marketplace selling, using platforms like Amazon, eBay, or Etsy to reach a wide audience without building your own website. Then there's selling through personal websites, using platforms like Shopify, WooCommerce, or a custom-built online store. This gives sellers more control over branding, pricing, and customer experience. Social commerce is also on the rise. Many businesses now sell directly through Instagram, Facebook Marketplace, and TikTok Shop, tapping into the power of social media to drive sales. Another popular model is drop shipping and print on demand, where sellers partner with suppliers to fulfill orders. This means you don't need to hold inventory. Products are shipped directly from the supplier to the customer. And let's not forget subscription services and digital products. From software and memberships to online courses, many businesses generate steady income by offering recurring or downloadable products. No matter which model you choose, taxes still apply. Understanding your tax obligations early on can save you from unexpected legal and financial issues down the road. Tax compliance isn't just a legal requirement. It's essential for keeping your e-commerce business running without disruptions. Ignoring it can lead to serious consequences, and many sellers don't realize the risks until it's too late. First, there are heavy fines and penalties. Governments strictly enforce tax regulations, and if you miss a filing deadline or submit incorrect information, you could face substantial fines that quickly add up. Then, there's the risk of account suspensions. Platforms like Amazon, Etsy, and Shopify take tax compliance seriously. If you fail to meet their requirements, your account could be frozen, stopping your sales instantly and leaving you scrambling to fix the issue. And if tax authorities suspect unpaid taxes, they can conduct audits. This could lead to retroactive payments, where you not only owe back taxes, but also face additional interest and penalties, turning what seemed like a small oversight into a major financial burden. In extreme cases, legal consequences can follow. While not every tax mistake leads to court, repeated non-compliance can result in lawsuits or, in severe situations, even criminal charges. For example, in 2021, thousands of Amazon and Etsy sellers had their accounts suspended for failing to provide VAT registration details required under EU and UK tax laws. Many lost revenue overnight and faced long, costly battles to regain access to their stores. The bottom line? Tax compliance isn't optional. It's essential. Staying informed and proactive helps protect your business from unexpected setbacks and ensures long-term success. E-commerce taxation isn't the same everywhere. It varies by country and region, and understanding these differences is crucial for online sellers. First, there's sales tax in the USA. Unlike other countries, sales tax is collected at the state level, and the rules depend on economic nexus laws. This means sellers may be required to collect sales tax in multiple states, depending on their sales volume. Then we have VAT, or value-added tax, which applies in regions like the EU, UK, and UAE. VAT rates vary, and sellers must register and charge the correct tax based on the customer's location. Next is GST, or Goods and Services Tax, which is used in Canada, Australia, and India. This tax applies to both digital and physical products, and sellers must collect and remit it according to local regulations. Beyond that, there's income tax, which is required in most countries. As an e-commerce seller, you must report your business profits and pay the applicable income tax based on where your business operates. If you're selling internationally, import duties come into play. These are customs charges applied to cross-border shipments and can affect pricing, shipping costs, and overall profitability. And finally, some countries have introduced a digital services tax, an additional tax applied specifically to online services, software, and digital goods. Understanding e-commerce taxation is key to avoiding compliance issues and making informed business decisions. Stay ahead of tax regulations to keep your online store running smoothly. E-commerce taxation isn't a one-size-fits-all system. Each region has its own rules, and sellers must understand them to stay compliant. In the USA, sales tax isn't collected at the national level. Instead, it varies by state and depends on what's known as economic nexus, meaning if your sales exceed a certain threshold in a state, you're required to collect and remit sales tax there. Over in the EU and UK, VAT, value-added tax, is mandatory. Sellers must register for VAT OSS One-Stop Shop, a system that simplifies tax collection and reporting across multiple EU countries, making cross-border selling more manageable. In Canada and Australia, GST, goods and services tax, applies, and sellers must register once they cross the revenue threshold. This ensures taxes are collected properly on both digital and physical products. Meanwhile, India and China have strict e-commerce tax regulations. Online marketplaces must ensure that GST and tax reporting are fully compliant, both for local sales and cross-border transactions. Sellers operating in these regions need to stay up to date with evolving tax laws to avoid penalties. Tax laws are constantly changing, and understanding how different regions handle e-commerce taxation is key to running a smooth and legally compliant online business. Navigating e-commerce taxation doesn't have to be overwhelming. While tax compliance is mandatory, adopting the right strategies can streamline operations, reduce risk, and improve profitability. Here are some of the best strategies successful e-commerce sellers follow. Register for a tax ID. Though not always legally required at the beginning, obtaining a tax identification number early can help you avoid compliance issues when scaling your business. Automate tax collection. Using platforms like TaxJar, Avalar, or Shopify, tax can simplify calculations, reducing manual work and potential errors. Understand Nexus laws. In the U.S., tax obligations depend on economic nexus. This means that selling in certain states may trigger tax responsibilities even if you don't have a physical presence there. Separate business and personal finances. While not legally required, it's highly recommended to maintain separate business accounts to track income, expenses, and deductions efficiently. Keep detailed tax records. Consistently tracking invoices, receipts, and tax filings is essential for future audits or regulatory changes. Even if your country does not require detailed records now, keeping them can protect you from unexpected compliance shifts. Stay updated on tax law changes. Tax rules evolve frequently, and failure to stay informed could mean unexpected liabilities. Consider subscribing to e-commerce tax newsletters or using automated alerts. Work with a tax professional. While many e-commerce businesses manage taxes independently, hiring a tax expert can help optimize tax structures, reduce liability, and prevent costly mistakes. The importance of good and planned strategies can be easily understood with the real-life example of a Shopify seller who integrated automated tax collection early in their business journey. While they were not initially required to collect tax in multiple states, as their sales grew, economic nexus laws applied. Because they had automation in place, they avoided compliance issues and saved thousands in penalties. E-commerce taxation may seem complicated, but understanding these key points can help you avoid common mistakes. Like, share, and subscribe to stay updated on tax strategies and business growth tips. Need help navigating e-commerce taxation? Our virtual CFO service provides expert tax guidance, compliance solutions, and business optimization strategies. Contact us today for a consultation and take the stress out of tax management.